Hey everyone, welcome back to the channel. I'm Sam, and if you're new here, I hope by the end of this video, you'll hit that subscribe button. Now let's be real. The market has been brutal, not just for a few days, but for months. The energy has been drained, price action has been sluggish, and it's starting to take a serious toll. Investors, especially retail traders, are exiting crypto in waves. Frustration, exhaustion, and uncertainty are at an all-time high, and it's understandable. But here's why this week is critical. It's packed with major events that could shake up the market in ways we haven't seen in a while. I'm not here to clickbait you or sell you a dream. This week actually matters. And personally, I've got USDT on standby, ready to deploy if we see a major sell-off. Why? Because history tells us that when fear reaches extreme levels, the best opportunities arise. Now let's talk numbers. The total crypto market cap has been hovering around the mid $2 trillion range, barely budging over the past few months. The fear and greed index, sitting at 24, deep in fear territory. Over the last 7 days, Bitcoin is down nearly 6%. Ethereum has dropped to 1,800, and the broader market has taken double-digit losses. It's like a slow-motion bleed out, shaking retail investors to their core. But here's where things get interesting. Even in this sea of red, there are pockets of green. Some assets have seen gains, nothing spectacular, but enough to remind us that not everything is in free fall. However, the broader sentiment is overwhelmingly bearish, with crypto losing hundreds of billions in value. This kind of fear-driven shakeout is a pattern we've seen before, and it often sets the stage for a massive reversal. Now let's zoom out. The market's overall structure is still intact. We're not in a full-blown bear market, despite what the headlines say. This is still a bull market experiencing a deep pullback. Look at the all-time chart. We're near levels last seen in late 2021, yet sentiment is somehow worse than during the actual bear market lows. XRP is a prime example. Unless you bought at the absolute peak, you shouldn't be panicking right now. The problem? The narrative. Fear is dominating the space, fueled by headlines like recession probabilities rise from Goldman Sachs and Moody's, pushing recession odds from 20% to 35% within 12 months. The fear cycle is reaching extreme levels. But let's remember, peak bearishness often precedes massive rallies. This week, all eyes are on the markets as tariffs take center stage. Billions are being wiped from stocks and crypto alike. On March 28th alone, over 130 billion evaporated from the crypto market. Meanwhile, the S&P 500 is set to open in correction territory with a staggering 2.5 trillion in losses projected. And then there's Liberation Day on April 2nd. The day President Trump is set to introduce new tariffs affecting over 1.5 trillion in imports. This is being touted as the most significant escalation of the trade war yet. But is it really as devastating as the media claims? Historically, extreme fear in financial markets often marks turning points. And with over 50% of investors expecting a crash, the conditions for a major shakeout and a subsequent rally are aligning perfectly. Just look at the data. 25% tariffs on steel and aluminum, 25% on most Canadian goods, 10% on energy, and reciprocal tariffs from China, the EU, and Canada. It's a financial battlefield. And every time we've seen extreme bearish sentiment, whether in March 2020, the FTX collapse, or any major crypto sell-off, it's been followed by a massive recovery. But this week isn't just about tariffs. We also have key economic reports, including ISM Manufacturing PMI, JOLTS job openings, the ADP non-farm employment report, and Powell speaking on Friday. It's a perfect storm for volatility, which is why I'm making this video, to help you navigate it. So what's the best move? Stay level-headed, don't trade on emotions, hold stable coins on the sidelines, and be ready to take advantage of opportunities. If history is any guide, we're on the cusp of a major relief rally. Bitcoin's moving averages suggest a setup similar to previous breakouts, and the so-called death cross, which everyone loves to panic about, has historically marked local bottoms before major uptrends. At the end of the day, the fundamentals haven't changed. The dollar is weak, risk on assets remain in play, and the broader market structure remains intact. The bearish narrative is loud, but we've seen this play out time and time again. The headlines are screaming doom. Trump threatens tariffs on Russian oil. Recession fears soar. Market crash incoming. Sound familiar? These same fear-driven narratives dominated past market bottoms, and every single time, those who stayed patient and focused reaped the rewards. So let's keep perspective. This week will be volatile. It will test nerves, but don't get shaken out. Stay strategic, stay prepared, and as always, zoom out. The best opportunities come when fear is at its peak. If you found this video valuable, hit that like button and turn on notifications. You can also follow me on X for real-time updates. The link is in the description. Thanks for watching, and as always, stay sharp. Peace out.